Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, some weeks there seems to be a lot going on. In others, you seem to be waiting for the key event. And for this week, that is Brexit. So all I'm looking at the moment really is the pound to the dollar exchange rate. Now, if you've been looking at it in the last week, you'll have seen it whipsawing up and down with every piece of Brexit headline that's been printed. So whether it's there's going to be a deal, whether we're not going to have a deal, we're going to crash out of Europe without a deal at the end of the transition period. The dollar and the pound have been fluctuating a hell of a lot. So we've seen the pound fall to $1.32 and then rally to $1.35 and go back and forth over the last few days. For UK investors, that is the key thing at the moment, the key metric to keep an eye on. Rather than all the headlines, you will know if something's going on if you see something happen very quickly and spontaneously in that exchange rate. Then you know to go and look at the headlines. Otherwise, you can be like me and largely ignore all the gossip and headlines around Brexit, because apparently today is one of those, yet another crunch talk, this time obviously between Boris Johnson and the European Union. Will we get a deal? Now, for UK investors, this is having a huge impact on portfolios. One day you will see your portfolio rally by more than 1%, for example, and markets have largely not moved. And it's because of that exchange rate and the conversion from dollars into pounds and the pound against other currencies for those overseas holdings that you have, be they equities or bonds. So right now we're waiting to see what happens with Brexit. Of course, there are other stories out there. There is the US government stimulus. Will we get some? Of course, there's COVID. There's the vaccine. There's a whole host of other stories bubbling in the background, but largely we're worried about Brexit because it's having the biggest impact and probably going to be the biggest potential market moving event we see before the end of the year. So all eyes on Brexit. Now, the markets, putting the pound and exchange rates aside, they've been still in buoyant mood. We've seen the US major indices hit all-time highs. That includes the Nasdaq in the last week. The FTSE continues to push higher. It's nowhere near its all-time high, but it's up to around about 6,600. I mean, the S&P 500, for example, has gone over 3,700. This is all positive news. Breadth within the markets continues to be strong. So the number of equities, number of stocks pushing above their 200-day moving averages, for example, continues to grow. That's all good news for a bull market in equities. And of course, the Nasdaq's and tech stocks have been struggling a little bit relatively compared to maybe some of the cyclical sectors. But we've seen the Nasdaq 100, which is very tech heavy, be up for 11 straight days in a row. This is all positive news, and it just goes to show that this time of year does have a seasonal positive for equity markets. Seems to be holding the case, the Santa rally, as it were. Is it going to happen in December? We certainly seem to be seeing the beginnings of something very positive. Seasonality is definitely not moving against the market at the moment, but the Nasdaq apparently, according to history, tends to have a good December. Will we see the same again? I mean, the Santa rally phenomenon, I've been doing some research for 80/20 investor members, which I'll send out later this week. And it does exist. There are always very good odds of there being a Santa rally. And there is a very interesting dynamic when we are in a US election year like we are right now. But the point is, there is the phenomenon of a Santa rally appears to exist, not just in US equities, but also in UK equities. So will we get it towards the end of the year? The odds are that it's looking pretty good. But let's be honest, there's lots of reasons to be positive about equity markets right now. But as I mentioned last week, the fear and greed index is showing that there's a lot of greed in markets. So could there be pride before a fall? But then this week, when you look at that index, that's pulled back to 74. So that just means that greed is driving the market, not extreme greed. So what's caused that is actually because we've seen haven bids. We've seen things like bonds come back into favour in the last 20 days. And that means their relative performance versus equities has improved. So people are being slightly cautious despite the seasonality, despite the good news out there surrounding vaccines and the increasing breadth in equity markets. So perhaps investors have still got one foot slightly out of the door. Well, that could be another positive for markets. We'll have to wait and see. Looking at gold, I mentioned gold last week, and I thought I'd mention it again this week, just because we've seen a pretty good rally on gold in the last week. I mean, since the beginning of December, it's up 3%. Lots of people have written gold off, but with the Fed increasingly printing money, inflation looking like it could make a reappearance in 2021, there's been a resurgence of interest in gold, and we're starting to push up above the sort of 1850 level. $1,900 per ounce is the key level. If we can get above there, then maybe we can start to push back towards some of the highs we saw during the summer. So we are still seeing equity markets performing relatively well, not the aggressive moves higher that we've seen during November and then coming into December, but they're looking positive. We've seen some bids on bonds, so there's still some people slightly nervous about this market. I think lots of people are waiting to see what happens with the US stimulus, the government stimulus, maybe more stimulus from central banks around the world, but particularly Brexit. So make sure you keep an eye on that dollar-pound exchange rate. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me. Damien at moneytothemasses.com is the email address. Twitter, moneytothemasses with the number 2. Instagram, Facebook, and of course, don't forget to subscribe to our YouTube channel.